Good morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw, Senior Market Specialist at FXCM. My email address rshaw@fxcm.com. Today is Wednesday, and it's the 17th of November, 2021. Just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. So we'll take a look at the DAX this morning. I also want to add Bitcoin to it because we usually do a crypto minute on a Wednesday, and I haven't been able to do that. So I'm just going to combine those two this morning, but we'll do the DAX first, and then anybody that wants to stay on for the crypto minute is certainly most welcome, or for the crypto analysis. Here's our market commentaries disclaimer. I'll keep this on screen for a few moments. And just finally, Market Scope 2.0 is the charting package we'll be using. Here's the DAX. Just before we get into that analysis, I want to go through the CNBC morning note as well. Hey, Indra, good morning to you. And it's a pleasure to have you on the morning webinar. Thank you. All right. Also, just something that I saw earlier. I'm sure you guys are aware of it. The inflation data out of the UK is remarkably high. It's much higher than the consensus forecast. I think that the BOE has to raise rates in December, but I'll be honest, the central bankers are, I think, confusing the market. They're confusing me, that's for certain. During one of the 2 days ago, during the monetary policy hearing, Governor Bailey suggested that he is interested in monitoring the employment data going forward. So the employment data this week was strong. He just wants to see if it remains so with the furlough schemes coming to an end. And I could understand that, but the BOE doesn't have as a mandate full employment. The Fed does, the BOE doesn't. But they, of course, have the usual mandate of price stability. So it seems to me that their focus should be more on the inflation numbers than the employment. I will say that the BOE does have financial stability as their main, so price stability and financial stability. I'm not sure what the definition of, in terms of the BOE is in terms of financial stability, but perhaps the labor market kind of fits in there. Nevertheless, I would expect the employment data in about 4 weeks to be strong. And if it is, given the inflation print today, I think they have to go. They'll have to hike. And then we've got, I think, the retail numbers for the UK come out on Friday. So that's another print just to keep your eye on. All right. So that's just something I noticed this morning. All right. I'm going to go through the CNBC note. European markets are set for a lackluster open today as investors await the inflation reading. Okay, so we've seen the UK, but there's going to be inflation coming out, I think, of Europe as well. They continue to monitor corporate earning releases. Shares in Asia Pacific declined overnight as Japan's export growth slowed to an 8-month low, sending shares of automakers lower. US stock futures were little changed in early pre-market trading on Wednesday as investors geared up for earnings report from big box retailers Target and Lowe's. Markets stateside received a boost from strong retail sales and industrial production figures. So again, another puzzling piece to the puzzle. Friday, remarkably low consumer sentiment. Yesterday, remarkably high core retail sales. It's just hard to marry those two data pieces together. I have to give it some thought. Then the industrial production and the capacity utilization beat expectations. The demand side is strong. Demand side is strong. So again, it comes down to, well, what are the central banks waiting for? You know, what are they waiting for? Everything is heating up remarkably, and if they get the timing wrong here, that could be a huge policy mistake. So we are living and trading in an exceptionally interesting time. Okay, back to the morning note. Investors will be looking at UK inflation, Eurozone inflation, looking for clues on how central banks will move in the coming months. Earnings before the bell come from Sage, British Land, and Experian, among others. Bitcoin will also be on the radar after the world's largest crypto dipped below 60,000. So we'll take a look at crypto a little bit later in a few moments. Okay. Let's just take a look at the weekly DAX. Strong week for the DAX so far. It's only had 40% of trade of the week's trade, right? We've only had 2 out of 5 days. So, and we've got a nice sort of range candle here. We've got the stochastic in this 80 area. That's where we want it to be. We want it to hold in this level as well, and we're not overbought. So by and large, this is looking really good in my estimate. The only issue is that we're not trending, which is a funny thing to say because we've had 1, 2, 3, 4, 5, 6 weeks of extreme robustness. But we work to a definition of trend. Okay, we work to a definition of trend, which we all know, and the trend definition is a higher trough followed by a higher peak. Now, that comes from Charles Dow. It comes from Dow theory. It stood the test of time for 100 years ago. And look at market price over 100 years, you know, and you look for the definition of trend, and it becomes apparent that it stood the test of time. It's something that Charles Dow, who was the first editor of the Wall Street Journal, saw in his time. Nothing's changed in terms of trend. So we want to get this lower. We want to get this higher trough followed by this higher peak. When it comes is the key question, of course. My feeling is that there has to be some sort of stabilization fairly soon, and the reason for that, if I bring up the daily chart, we're overbought. Okay, so we picked up this overbought yesterday. The analysis yesterday suggested it's going to normalize, but in terms of timing, well, it could spend a fair amount of time before it normalizes. So over here, it spent a fair amount of time in excess and then normalize, but it doesn't have to. I mean, it could hit the overbought and sell out, but I think that the earnings seem to be supporting markets for the time being. That being the case, we may see this sort of exuberant level holding for a fair amount of time, but you must acknowledge this overbought area, because that is how you want to trade. You want to be thinking of risk more than reward. Portfolio managers think first and foremost about risk. Okay, when you start looking for diversification in your portfolio as an asset manager, you're not looking for reward. You're looking for risk-adjusted reward. Okay, so the idea is they want to add diversification that reduces the risk. Now, we obviously don't have the luxury of diversifying because we are traders. So what we do instead is we look for excess in specific instruments, and there's an excess in the DAX here. Again, it will normalize. I just don't know when. The momentum is very strong at the moment, and I think that, as I said earlier, has been supported by the earnings. We've seen some really good numbers coming out, and we are firmly in zone 1. Let me just see this. I want to put this on logarithmic. Okay, so we're in zone 1. We've got a reference candle here, a bullish reference candle, and the swing is on. At some stage, we're going to normalize. Either that means price moving sideways or a pullback. I think once the stochastic, once the RSI normalizes, we have better risk-adjusted opportunities. But again, there has to be at some stage, it doesn't have to be a big pullback. It can be maybe 1 week, 2 weeks, but something that has a lower high, lower low here, and then ticks back up, just to give us that extra sort of point or a trend. I'm going to do cryptos after this, so I just want to finish with the DAX, and then I'm going to do cryptos in this webinar. So anybody that wants to stay, certainly welcome. Anybody that's just for the DAX. So I just want to kind of get this out the way, and then we'll do the cryptos. So this is the situation. Bullish for sure, frothy for certain. Okay, we're going to go down to the hourly chart now, and you can see that the hourly chart here is actually in a terrific position. But let's just talk about what happened yesterday. Okay, so we had prior to yesterday, we had this run over here. Okay, we had this run here. Now we pointed out, look where the stochastic was. It was near the upper quintile, right? That's the key. Stochastic at the upper or the lower quintiles, depending if you want to go long or short. So, and then we had a terrific push up over here. Take a look at our stochastic, how it just sticks in that area. It's terrific. So that was a nice one. Okay. The problem, of course, and I don't want us to sort of push us to the back. This is forefront. The higher time frames dominate the shorter time frames. There's froth on the daily. Just be aware of that. Okay. That means stop loss strategies have to be adhered to extremely strictly. Money management, extremely strict on that. And here you can see we're getting a positive cross just before the cash open here. So that's trigger 1. Here's the next trigger we need. So we need the stochastic to push bullishly. If that happens, it needs to make its way through to the 80 and surf the 80. Surf the 80. And then we get nice potential for swings. So it's looking pretty good. Not frothy on the hourly. So this is a potential opportunity here, with the caveat that we acknowledge this guy here. Okay, this guy here. So I think the fundamental releases, the earnings releases, are keeping the market quite excited. But just understand that we can't stay at 80 forever. It will normalize. So just to reiterate, weekly looking strong. Okay, just waiting for that trough to come in. Daily looking strong but frothy. That's going to have to normalize. Hourly looking strong within a frothy daily. Okay, so that being the case, risk management should always be in our forefront of our mind. If you are happy to take the risks and expose yourself to an overbought RSI, fair enough, but you be absolutely tight and disciplined with the risk management strategy. All right, I'm going to go on to cryptos now. If there's any questions, just go ahead and type those in. But I'm just going to take a look at Bitcoin, because it has come down. But I just want to do a quick analysis of that. So we bring Bitcoin up here. All right, and then again, we're going to do a top-down analysis. So okay, and in terms of our crypto offering, I know UK retail traders, by regulation, you're not allowed to trade it, but where it is allowed in other areas. We have included Dogecoin and other cryptos here. If you go through your crypto list, you'll see that. All right, so this is the weekly chart, and you can see that the 64,000 here is probably the resistance level to beat. Okay, right now we are in an uptrend. We can't deny that technically we've been talking about higher trough, higher peak. Well, it's very apparent on the Bitcoin chart. Here's the higher trough, here's the higher peak, right? Higher trough followed by higher peak. And now we've hit this resistance area. And if we get a reaction off of resistance, well, the question we ask, is that really a bad thing? And I would argue, not yet. It's not. It's just an opportunity for the next higher trough in the series to be followed by the next higher peak. Now, do I know that's going to happen? Of course not. But I know that if there has to be a trend, then there has to be higher troughs, higher peaks. Howard, just shoot me an email. I'll send you a list. They've just been added this week. I'll send you what's been added. If you don't mind, just shoot me an email. So we've got this higher trough followed by higher peak. Now we want this. We want to see if we get this next higher trough. If we get the next higher trough, then we want to see if we get the next higher peak. Then we've got the trend running. Now, let's play devil's advocate. Let's say that we've actually seen the peak of Bitcoin. What are the ways that it could move down? Again, I think the clues are in the way the price action trends, which would mean if we get a lower peak followed by a lower trough, well, there's the bearish scenario, but we don't have that yet. So yes, we've dropped below 60,000. Okay, well, we can't go up in a straight line forever. There has to be profit taking. There has to be ebb and flow in trends. We know that, and it's quite possible that's exactly what we're seeing here. And a perfect time for the price to react is at previous resistance. Now, if you take a look at this leg, this green leg here, which was the last time we had a really good impulse move up, where you can see that the stochastic stayed above 80. That's important. But the RSI was also overbought for 6 months. Now that is strange. That is strange. Okay. When we looked at the DAX, I've been saying, well, we overbought. It should normalize. Well, Bitcoin didn't normalize for 6 months. My reading of that is because there was an irrational emotional attachment to Bitcoin during this swing here. Okay, and the more attention that it garnered, the greater this emotional energy became. But as we've said, prices don't move in a straight line. At some stage, somebody's going to cash in. Okay, somebody's going to cash in, and as soon as there was more cashing in than demand, well, there was nowhere for the price to go but down. But if you're caught in this emotional influx over here, okay, it's energy that has to dissipate. Well, that resulted in a 50%. This is a big decline here. This is a 50% pullback, and I've drawn in the 50% line here. So from this low to this high, this is 50%. It doesn't look like it, but it only doesn't look like it because I've made this as a logarithmic chart. But you can see clearly it's a 50% Fibonacci retracement. So the emotional energy there really hurt the Bitcoin on this pullback. It then stabilizes, and then we get the buildup of another trend. But this time it's different. This time it's different. The emotional energy is not as intense, and that's a good thing because it means to me Okay, and of course, this is just sort of interpretation. It means to me that the pullback, okay, doesn't have to dissipate all this excess. All right, it just means that the normal sort of market laws of profit taking and re-entering apply, because there is less of a irrationality. So the likelihood of a big 50% pullback here, I don't think it's not as probable as it was after this sort of the green line study area. Not to say it can't happen, but I just think that it would be less probable. So if that's the case, then we need to see if this does have a higher trough as some sort of support. And then the key here is stochastic. The fact that we don't have the emotional component, I think then we can look at the stochastic with fresh eyes in terms of, is the Bitcoin momentum there? At the moment it's above 80, right? As long as it's above 80, well, then we may actually see the 64,000 challenged again, but it does look like it's curling over, so we just want to watch that carefully. It does look like it's curling over, and if it starts heading down, well, then this momentum leg has started to wane, and then we've got to see for the support to hold and see if the stochastic starts making its way up. I think the fact that we don't have this big emotional component is a good thing, and it does seem that there is a movement towards accepting Bitcoin as payment. The last article I read in this regard was AMC, which I think is cinemas in the States, were going to be accepting payments in Bitcoin, and I think that FXCM is accepting deposits in Bitcoin, and you know, that's the way that the world seems to be moving. So, having said that, perhaps there is that intrinsic value that I've always questioned. So we just want to keep an eye on it. But the big factor here is that the this leg up here has no sort of excess energy, because that excess energy is really what caused this 50% retracement here. If we go down to our daily chart here, you can see that we're not quite in the right area yet. We're in zone 3, so we're still potentially looking to make further lows. But again, I'm looking to see if there's going to be a higher trough here. And then once that kind of is clear, and once the hourly starts making its way back into zone 1, well, then we can start looking to see if the dips are worth exploiting. Now, there's just one final thing. There's just one final thing I want to say here, which I think I've never said before, but I think it makes this is the perfect opportunity. What about shorting this reaction? What about shorting this reaction? I think that's a bold move. I think that's a hugely bold move. You short into momentum, and that's an accident waiting to happen. Okay, so I just want to say, shorting into a bullish momentum is not wise. It may pay off once, it may pay off twice, but ultimately it's going to hurt. So just be careful about the idea here is, if we're in an uptrend, where the risk-adjusted entries, like on the dips. If we're in a downtrend, okay, and we're looking to short, where the risk-adjusted entries, they on the bounce. So just keep that in mind. All right. Any questions? Any questions? All right. I think then let us conclude at this point. Howard says it's good to accumulate. So again, the idea on the dips, I've got to be very careful with the way to answer this. I can't give buy or sell. What I would suggest, just from the way that the webinar system is structured, is we are looking at the dips to enter uptrends. So I hope that answers the question. And remember how we don't just do it willy-nilly. We want the triggers. Once we have the triggers, we've got the stop losses. Once we've got the stop losses, we understand how much to allocate, and then we want the momentum to be reflected in the stochastic. All right. Thanks very much, guys. Let's conclude there. And of course, anybody wants to email me, send your emails to rshaw@fxcm.com. Thanks very much, guys.